We're certainly getting there. Last year was a good year for us on that front. We think, this is still maybe a 2-3 year journey more for us to really make that shift. 3 years ago, we made the decision that we were going to move from being a property developer to really focusing on the fund management business. With the rationale being that we wanted a higher ROE business, a higher return on equity, because we felt that as a company, we shouldn't really be looked at on a price-to-book ratio, but really on a multiple of earnings. And the reason we think we get that multiple is because of the recurring income. So what you have seen from last year's financial results is the recurring income component from the fund management business. That part of the operating profit actually grew 10%. So that's been good, steady growth for us over the last 3 years. Average, I think, 9% for 3 years in a row. That's the shift for us. Why the overall came down is just as you mentioned. We divested 5.5 billion worth of assets last year, which we think is great because it gives us a lot of headroom or debt capital for growth, which is really the story for us this year, I think, is we're going to be focusing on investing for growth. Acquiring platforms, potentially asset portfolios in order to help seed the fund management business and grow that operating from the fee business even faster, really trying to get us up towards a double-digit return on equity as soon as we can.
And I want to get to some of those growth projects, those potential, the ones that show a lot of potential. But because you are still going through this process of trying to divest and probably also decrease the balance sheet assets, are we going to expect that operating profits after tax will continue to be a little bit challenged, but really mainly because as you're going through this particular process of shifting or changing course, we're going to see this particular part of the results perhaps just a bit challenged over the next couple of years?
Well, the two components, the fee business component and there's the real estate income. So the real estate income is exactly as you mentioned. Yes, there's going to be a little bit of softness there as we divest assets. As we divest assets, that earning will naturally come down. Though potentially if interest rates move in the other direction this year, we'll see that improve. But what we are hoping is that the fee income business more than offsets that. So if the fee income business grows at a double digit and we're able to see the uplift from some of the recent M&A that we did, that should actually make up for any softness that we see in the real estate income.